Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, all. Ira Epstein of Linn Associates with your agriculture update for this Monday, the 23rd of April, 2018 at 1:50 p.m. Central Daylight Time. Friends, I'm having my webinar tomorrow. So in the webinar, you get to ask questions of me. We'll bring up all the charts you want, be it ags, whatever you want in the markets. We bring up, we construct charts and try to figure out where to go. All of the invites have been sent. I'm not sending any more out. So to get in, if you didn't get your invitation, then call my staff. They will send you one out. And yes, you need both the link and the password, so you need the invite in order to know what this all is. All right, the big event of the day is that U.S. interest rates in the benchmark 10-year note went up to 2.99%. Knocking on that door of 3%, which has taken the metal markets down, the stock market down, kicked the dollar up, and most goods, not all, but most goods priced in dollars felt some pressure. We've also come off the lows of the day pretty big. So the thing is, it's lingering, but I'm questioning, is the market taking us to that doorway again, and it's going to not go through that 3% number and then maybe overreact in some of the markets? Remember, today we're going to get our first plantings of how the crops are going, how much the farmers have gotten in. We're expecting 3 to 5% in the corn, no more than that, and that's because the weather has been terrible. But from this point forward, 50s, 60-degree weather without snow, believe me, those tractors are going to run as long as the farmer can stay up, and it's amazing how much they can get done. The first crop that farmers like to plant, now you understand that, is corn. I know a lot of people say, you're going to see shifting the beans because of price. My experience has been, yeah. So in looking at the market, the corn probably saying, okay, we don't have enough done, so we'll put some premium into it. The wheat market under harvest pressure shortly, and of course soybeans a big unknown. As we take a look at a weekly area chart of soybeans, a couple of things on the chart. I say an up thrust in the market, but if I come back here, it should be a down thrust right now. Why? This settlement's under that one, and the market had a pattern of a higher high. So now it's broken through. I will adjust that. I could have done it, but I wanted to show you. The confusion for some is because you're over the 18-week moving average, I'm going to say the market on the longer-term chart of just closes has upside bias. So there's a difference between the thrust and a filter looking still that the beans are still okay as long as they don't close under 10, 10.5. When I come to the daily chart, you can see how the market's breaking back, and it's come now off that high 1070s down actually pretty sharp. We lost about 8 cents today, as you can see. The pattern is one of lower highs, lower lows. That is bearish. Where did the market go? Let's come back a day or two, because when we did our weekend work on Friday, we don't get to see all the dailies. This was the close of business Thursday. And on Thursday's close, you had settled at 1049, just under the 18-day average. So what that gave you is a downtrend, bias down. Market has one support zone here, 1025. The resistance is 49.25, and only if you get over 63.75 can you break this chart trend. I haven't shown you momentum yet, okay? Let's put on the Bollinger Band first. Notice how the Bollinger Band in the 18-day average coming in at 1025.75. If I know no more, if you're short this market, I'd be looking for support to show up at 1025.75, resistance back at 1049.5, and only taking out 1063.75 negates this part of the chart. What about momentum? The momentum it's just breaking down. It's not oversold. It's just in a downward momentum now. So support right here, resistance. The bears grabbed control of this market. When you come to the soy meal market, you've got a pattern of lower highs, lower lows. You've been under the 18-day average. Momentum is down, bias down. If the market wants to continue lower, I'd be looking for that 370, 380, the lower Bollinger Band. Soybean oil's been more bearish than either the beans or the meal. It's had what we call an embedded reading. Now, unlike here when a market will get up towards 80 or down into the 20 zone, when you get a pattern where both numbers that make up the slow stochastic study, they're called the K and D line, the red and the blue, if you will, K and D. When they're going sideways under 20, I call that locked in. Embedded is the word that I like to use. And until the red line closes back over 20, I'm looking on rallies for aggressive sellers. Lose that number by getting the red over 20, then I look for the 18-day average of closes to be a potential target upside. In the corn market, momentum is down. Market's got lower highs, lower lows. What's the bias? Down. Resistance, 393.25. Now, that's an important number. The last rally high was 392.5. In order to hit the 18-day average, you have to break the pattern of lower highs, lower lows, which would put you neutral in the market. Interesting. In the wheat market, trend down, lower highs, lower lows. Where did the market stop? Let's go back to Friday. Here's Friday's action, which we couldn't have seen because we were doing the weekly charts. But you've got your lower highs and lower lows already in place. The next support is the 100-day average. If that can give ground, then potentially you get to the lower Bollinger Band of support as long as you're not oversold. And you're not oversold. You broke down today to the first support level. You hit 472.25. The 100-day average 472.75. I say the bears will be waiting for the market aggressive to 484 area. They wouldn't want to see the market over 494. And if you don't rally up there, if you just leak away, you might be looking at the lower Bollinger Band. In the sugar market, we have what's called an embedded reading. Just like in the soybean oil, this means that until that red line's back over 20, rallies in this market get hit. I think that's what it tells you ahead of time. Does it always work? Nothing always works. Who cares if something works all the time? You're looking for high probabilities. And you've got them. Lower highs, lower lows, Bollinger Band holding. But this is not sideways action. This is a well-defined downtrend in the market. Clear the 12-cent area, you might get enough of a rally at that point to even lose the embedded reading. So we'll see what happens. But I say the bears are in control. And today the bulls grabbed control in the coffee. They already have a pattern coming into today of higher lows, higher highs. However, what's wrong is you're under the 18-day average. So the bias is down. In order to get the bias up, with this pattern, you got to close over the 18-day average of closes, which it did. Now, if somebody were buying this market against that 18-day average, your dilemma is money. You're not wrong if you believe in the chart pattern until you make a lower low than 115.70. If the market continues up, where could it go? Upper Bollinger Band, and momentum's up. So it entered the bull camp here. In the cocoa market, you've got your momentum turning down. Remember, I believe that price momentum leads the market, and it's pulling on prices. You do have a bull trend. You've got higher lows, higher highs. What it did is it took this sideways action, notched it up a little bit. It can easily afford to go back to that 18-day average. The key is, where does it get out of the overbought condition? That's what I'm looking for. In the cotton market, you have a market that, in terms of slow stochastics, both numbers today are over 80. If we go yesterday, both numbers on Friday, that's Friday's numbers, were over 80, but not the day before. To me, tomorrow's going to be the key of the market. You can see how you got up, you tried to challenge over the upper Bollinger Band, and you failed miserably at it. The question is, what happens? Do you embed or not? And I think tomorrow's going to be your key day. In the cattle market, we had a cattle on feed report on Friday. And the hardest thing with these reports is not even guessing them right. It's what's the reaction to the market going to be. I looked at the report and didn't see anything that I thought was super bullish. Yet here's the market up 115 points. If we go to the feeder cattle, you were up 260 points. So obviously, in terms of the market, in a reaction, the market liked the fact that the herd is getting smaller. In other words, they're not breeding as many animals, and that's what the market looked at. But keep in the back of your mind, look at this important resistance from 147.72.5 down to 147.12.5. You got to 147.45, and you backed off right on the close a little bit. In the hog market, this break low today takes out that one. You got a higher high, a lower low, momentum turning down. You've lost your uptrend. Remember the webinar tomorrow? Hope to see you there. I'm Ira Epstein.